I think the big question on everyone's mind right now is the market going to crash? So let's talk about it. Hey, what's up? My name is Vayna Jerebeck. I am a local realtor here out of Seattle, Washington. And with all these headlines going around about the impending recession, the housing market's coming down, stock and crypto are crashing, I found it a very appropriate time to come on here and do a local market update for Washington State. So thanks for tuning in. If this video turns out to be helpful for you, please leave a like and subscribe so you can get all the updates on the Washington markets. We post a lot of content about what it's like to live here, moving here, market updates, all of it. So subscribe below, hit the bell to see our new videos as they come on, and stay updated, and let's get into it. So when we're talking about the market, I'm going to make some general remarks, and then we're going to look at some specific statistics, market-based numbers. We're going to talk about the entire Western Washington today because these submarkets act very similarly in relation to each other, save a few areas, but overall we're going to look at averages. So entire Western Washington, we're going to look at our stats and what's going on. We're also going to make comparisons to 12 months ago in August, September 2021. Remember when the headlines were saying hottest market in history, where houses were selling quickly for top dollar? It was a buyer frenzy. It was nuts, right? We all know what was going on last year. So we're going to take a look and see how much has the market changed. Is there going to be a future downturn? Is the market going to crash? And what's really going on here in Washington? So first thing we look at is how many listings came on the market this month, how many went pending, and how many sold. We had about 2,300 new listings come on this month in Western Washington compared to about 2,500 in August 2021. It's about an 8% decrease in new listings. It's a pretty small pullback from sellers, but what's interesting is that we have 3,900 homes for sale right now, where last year we had 2,200 homes for sale. That's actually an 80% increase in the inventory of homes for sale. That means that month by month, we're having homes sit on the market longer. They're taking longer to sell. And so seller competition has decreased quite a bit. There's 80% more homes you're competing against when you go to list your house. That's a lot more than last year when you had no competition. You could list for any price you want and your home would sell in 17 days or less. In the major cities, it was 3 days or less. With that being said, we have about 20% less pending sales than last year and 20% less closed sales. So there's less market activity compared to last year. That's pretty evident given that interest rates have significantly increased from last year when we were seeing rates of 1.9 to 2.4%. Now the rates are in the 5s and 6s. So that is a really, really huge damper on buyer purchasing power. In our market, buyers have lost hundreds of thousands of dollars worth of purchasing power. And for this reason, they've gotten knocked down several price points. And so these houses are all sitting on the market longer as buyer affordability has decreased. The average time it took a home to sell last year was about 17 days. Like I said, it was way less in the major cities and counties. And now we're up to about 23 days. That's a 35% increase in the time it takes to sell a home. Compared to last year, we're seeing properties sit on the market as long as 18 to 40 to 60 days before they sell. The good news is that they are selling eventually, and well-priced listings are still getting into some multiple offer situations. But overall, just because of this buyer uncertainty with the interest rates, houses are taking more than a few days to sell. We're really returning to a balanced market. More good news, the average home this summer sold for about $550 in Western Washington, and last year the average was $525. So on average, we saw a 6% appreciation increase, taking into account that homes were selling for very overinflated prices due to low interest rates last year. So that's good news. In King County, where Seattle and Bellevue are, the average price was $1.3 million. So don't go thinking that King County is affordable yet. And King County saw a 23% increase from last year. So that's great. King County is a great place to buy and invest, as we can see. Because we're just looking at Western Washington as a whole, we're seeing decent price appreciation. Last year, on average in Washington, homeowners were receiving 104% of list price. So houses were selling about 4% above what they were listed for. And now they're selling about 99%. So we're seeing a lot of deals on the market for the buyers. They're getting homes below list price and canceling out that average. In King County, because it's a major county, it's where most of our residents are and where a lot of our Washington headlines come from. Last year, we were seeing up to 110% of list price received, and now it's about 99% in King County. So just the same, it's been quite the reduction in what listings are actually selling for. Last thing before we take a look at what all of this means for buyers and sellers, what I am showing everybody and anybody who is wondering about a market crash here in Washington is the month supply inventory. So we have a statistic that tells us if no other homes came on the market, how long would our current inventory of homes for sale last and satisfy buyer demand before we ran out of houses? So how long would it take for all the homes currently for sale to be bought? Last year, at the peak of the housing market here in Washington, the month supply inventory was less than 1. At one point, I believe it was 1 or 2 weeks. So if no other homes came for sale, the interest rates were so low and buyer demand was so high that we would run out of homes for sale in just a few weeks. That's a crazy, crazy number to keep up with, and that was the reason for all our headlines back then. Right now in fall 2022, that number has increased over 100% to 2.3 months of inventory. So for the homes we have for sale and the current buyer demand, given the interest rates and everything else that's going on, all these rumors of recession that are having buyers pull back from their search, it would take about 2.3 months for us to run out of houses to sell. Now, the reason we're not headed towards a market crash is because 2.3 months is still a very short time. Imagine having to keep up with 2.3 months of inventory of homes. If you're seeing headlines of recession and market crash, you should also be seeing the headlines that we are millions of housing units behind in production nationally. With millennials and Gen Z coming into the housing market, we don't have enough houses for people to buy. And what you need to know is that a balanced market has 6 months of inventory. So as long as we're still at a third of a balanced market or a buyer's market, it's gonna stay a seller's market for a while, and the market will still be healthy and the market will not crash. Now, I don't have a crystal ball, so I can't say for sure, but the numbers and the experts are telling us that we won't be seeing a downturn for at least another 2 or 3 years. Also, in future prediction, we are kind of hoping for the interest rate to come back down by the end of the year and into 2023, so that's some good news. Now, what does this mean for our buyers and for our sellers? With homes selling for less, taking longer to sell, but still being in a seller's market, what can we expect and what should we look out for? For our buyers, it is a blue ocean out there right now. Like I said, a lot of people have dropped out of the home search because of the interest rate increase. But if you're serious about buying a home and this is the right move for you right now, then don't worry about the interest rate. Honestly, you can change your interest rate later. What you can't change is the price you get a home for today. I get the question all the time, when is the right time to buy a house? And the correct answer is 30 years ago, right? If you bought a house 30 years ago, it would be paid off today. You wouldn't be making payments on it. You would have this huge piggy bank of equity and you'd be set and living comfy. Now, until time travel is released, the correct answer on when you should buy a home is yesterday. Housing went up 6% from last year despite the downturn that started in April. It's not getting any cheaper, my friends. If you're going to let the interest rate hold you back from buying an appreciating asset, then it should be for good reason. The good news for buyers right now is that for those desperate to sell, the sellers are offering credits on your closing costs. They are buying down your interest rate, selling for less than list price, all things that we weren't seeing last year because they still need to sell. There are opportunities in this market. I helped a buyer last week get a home under contract for $40,000 less than list price. We're doing it all the time. We're going to continue watching the interest rate and how it's affecting our purchasing power, but there are opportunities for buyers that there weren't 12 months ago. And for sellers, this all may sound like a lot of bad news. You may be afraid that the market's going to tank, but remember, real estate is always going to be a good investment. They're not making any more land. Again, I don't have a crystal ball, but your home is not going to drop in value anytime soon, and there's no need for panic. And if you do need to sell, you're moving somewhere else, you need to let a property go, do a 1031, whatever it is. As long as you position your home well on the market, you market and price it accordingly, you can get a home sold on your ideal timeline. Sellers still have options. There are ways for you to be very competitive in this market, and you can get a seamless transaction. Like I said, there are still properties selling in 7 days or less. So if that needs to be you, definitely reach out to us so we can help you with that. Again, my team and I are watching these stats consistently month by month because the market is changing every single day. Rates are changing, the time it takes to sell a home is changing. We are keeping up with these trends so that we can be of the best service to our clients. And with all of that being said, I hope this video helped you and shed some light on what's going on in our local market. If you have any questions about buying or selling or investing here in Washington, my team is here to help. Reach out to us below. We are happy to help with your moving plans in any way we can. There's a link below to book a time to speak with us at your convenience. We'll reach out, have a conversation about your plans and how we can help you be the most successful in this market. Please leave a like and subscribe if that helped you and to stay up to date on what we're doing. Thanks so much for watching this video, and we will see you in the next one.